You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 17th day of September, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one, that's our live training room, so it's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. There's no credit card required. We'll get your indicators up and indicating today. Your trial will officially start tomorrow, Thursday, and it'll run all the way through next Wednesday. 5 consecutive trading days. The weekend does not count against you. And when you take the trial, you're not just getting access to the live training room. We actually treat you as if you were already a passport holder for 5 consecutive trading days where you have access to everything. Now, the live training room is 2 hours each day, but we operate around the clock from Sunday night at 6 p.m. Eastern right on up until Friday afternoon at 5 p.m. Eastern when the markets close for the week. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, you only have to do it once. Go here to mytradingiq.com. Scroll down to where it says noon broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, just click the link in the email and that will automatically log you into our platform. The benefit there, you have access to the question box. So you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, so you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN, Christian Financial Radio Network, since 2005. But all you have to remember is youtube.com/CFRN. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Not only do we broadcast live every trading day on our YouTube channel, We archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. Obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have at your fingertips. And again, it allows you to see exactly how we've evolved over the years. Our schedule right here for the afternoon broadcast each day. 1 o'clock roughly, Michael will join us for a recap of what happened this morning in the live trading room. Then we'll do a little live trading on the TradingView platform. But to get started, we'll go to our daily devotional, which is where we start each and every day. And this is day 5 of 5. Reset your mind, overhauling toxic thoughts. Today's scripture is Matthew 4, verses 1 through 11. And I'm going to share it with you from the NIV translation. Then Jesus was led by the Spirit into the wilderness to be tempted by the devil. After fasting 40 days and 40 nights, he was hungry. The tempter came to him and said, "If you are the Son of God, tell these stones to become bread." Jesus answered, "It is written, man shall not live on bread alone, but on every word that comes from the mouth of God." Then the devil took him to the holy city and had him stand on the highest point of the temple. "If you are the Son of God," he said, "throw yourself down, for it is written, he will command his angels concerning you, and they will lift you up in their hands, so that you will not strike your foot against a stone." Jesus answered him, "It's also written, do not put the Lord your God to the test." Again the devil took him to a very high mountain and showed him all the kingdoms of the world and their splendor. "All this I will give you," he said, "if you will bow down and worship me." Jesus said to him, "Away from me, Satan, for it is written, worship the Lord your God and serve him only." Then the devil left him, and angels came and attended to him. Again, that's Matthew 4, verses 1 through 11. So, again, this is the 5th and final day of this topic. So let's talk about putting it into practice. Here's a quote from Dr. Caroline Leaf. "After 21 days of rewriting thought, you have wiped out the toxic thought and replaced it with positive, productive thought. Here's how we change our lives." Now, the scripture we just read tells about the enemy tempting Jesus when he was in the wilderness for 40 days. During that time, Jesus went without food. The enemy knew he was weak, and he tempted Jesus to turn from God. With each attack from the enemy, Jesus responded with the Word of God. Even though he went without physical sustenance for 40 days, he survived and thrived spiritually because Jesus spent time with his Father. He knew the truth. He was prepared for this temptation. We can't live in freedom if we constantly allow our toxic thoughts to monopolize our thinking. The best way to battle them is by applying Scripture, because that will strengthen us in our own battle. We must gear up ahead of time and not try to do this once we're in the battle. Soldiers don't look for their weapons when the bullets are flying. They are prepared ahead of time and at all times. So let's prepare ourselves by putting our minds to the test and choosing to capture toxic thoughts instead of entertaining them. And once we do that, we end that lie that has held us hostage by declaring God's truth. This is how we live free of toxic thoughts. But it is also true that if we will fix our thoughts on Jesus and live our lives to honor Him, the need for having to test and capture our thoughts will decrease. The author of the Message Paraphrase encourages us at the end of Philippians 4:8 to fill our minds with the best, not the worst, the beautiful, not the ugly, things to praise, not things to curse. We must continually be filling our minds with things that bring life. We must look for the good, for when we do, we'll find it. Here's something to reflect on. On day 3, you listed a recurring toxic thought that you needed to take captive, and hopefully you found a verse to combat that thought. Continue to do this for 21 days. And then note the victory you found after this. Make this practice a part of your day every day until this toxic thought no longer overpowers you. And list a second toxic thought that you're having. Find a verse to combat that lie. Follow the same plan as you did for the first lie. Continue this practice over every toxic thought that attempts to rule over you for the rest of your life. Let's pray. Lord Jesus, just as you overcame temptation in the wilderness by standing on the Word of God, help us to do the same. Strengthen us when we are weak. Guard us from the enemy's lies. And remind us that our true life is found in every word that comes from your mouth. Fill us with your Spirit so we may walk in victory and bring glory to your name. And everybody said, Amen. Amen, and happy Fed Day. You thought it would never get here, and now here it is. Polymarket says there's now a 99% chance that the Fed will give us a quarter-point rate cut. There had been hopes of a half a point, but I think those hopes have been dashed. But keep in mind, as we've talked over the last few days, there's the thing called buy the rumor, sell the news in the markets. And I think we could see that. Now, we get the rate cut the markets expect. It's already baked into the cake, as they say. But still, when the announcement's made, we should get a pop. But then at 2:30, there's going to be a press conference where Jerome will deliver the prepared statement and then take questions from the audience. And that will be the second wave of volatility. On FOMC day, a good thing to remember: the first move is noise, the second move is the truth. Now, that's a little more difficult to follow since we've begun this business of having a press conference. Remember, what the Fed used to do was very, very secretive. Okay, you got a Fed announcement, and that was it until the Fed minutes were released weeks later. This whole interactive environment that we have with the press conference 30 minutes after the announcement of the interest rate statement, that's still relatively new in the markets. So you have two waves, and I think you should treat each wave the same way. Now, the press conference, that could go 30 minutes, could go longer. I think the best position is no position until the markets return to their normal rhythm. And I think we're going to see, even if we get the quarter-point rate cut that's expected, even more so if we were surprised with a half point, because if we were surprised with a half-point cut at this point, then that would translate into, wow, the Fed's pretty freaked out about something we don't know about. Either way, we may see the pop today, but in the coming days, I think we'll see the correction that is, in fact, long overdue. That's simply how markets work. Now, keep in mind, Asian traders and European traders will not be able to react to the FOMC until the Asian markets open tonight at 8 p.m. Eastern, and then the London markets open tomorrow morning at 3 a.m. Eastern. So we have the two waves of volatility this afternoon, and then we have the wave tonight. Asia, pretty muted probably, but London could be strong. And speaking of London, the president and his lovely wife, Melania, they are at Windsor Castle right now, and they'll be spending the night. I spent the night in a castle in Ireland many years ago. Quite an experience. And this wasn't a rundown, shabby castle. You know, you can buy some of those pretty cheap, but the taxes are crazy, and the cost to return them to their former glory is outrageous. That's why they're so cheap. All right. I said I'd give you the numbers from around the world, I believe, so if I didn't, let me do it. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 272 points. The NASDAQ is down 114. S&P 500 is down 9. And the Russell 2000 is up 24, which is just over 1%. So yes, on this very important Fed day, the whole world's watching. We have the dreaded mixed markets. As futures traders, we like to see the four major indices the same color. Doesn't matter if they're all four green or all four red. But when they're all the same color, you get better follow-through on your trades. When they're mixed as they are today, you get a bit of a tug of war. So, in the commodity basket, crude oil is off 12 cents, trading 64.40 last. Gold down $3.10, trading 37.22 last. Silver down 59 cents, trading 42.32 last. That's a drop of almost 1.5% or a little over $2,500 per contract traded. In the Asian markets at the close, the Nikkei dropped 111 points, Shanghai rose 14, the Hang Seng gained 469 points. That's a little over 1.75%. And in the European markets at the close, FTSE up 12, the DAX up 29, the CAC down 31. So we had a mixed day in Asia. It was a mixed day for the UK. And as mentioned, it is a mixed Radio Wednesday Fed day here in the US of A. Be a lot of action this afternoon. My best suggestion I can give you: get some popcorn, climb up into the bleachers, watch the action on the field, and when things finally settle down and return to their normal rhythm, then and only then do you want to return to the playing field. Israel launched a ground offensive yesterday in Gaza City, where Israeli officials estimate 2,000 to 3,000 Hamas militants remain. The operation in the Gaza Strip's largest city has led hundreds of thousands of Palestinians to flee south. The United Nations estimated Monday that over 220,000 people have left northern Gaza since mid-August. The new operation coincided with the publication of a UN report that concluded Israel has committed genocide against Palestinians in Gaza since October of 2023. An independent panel found Israel committed 4 of 5 intentionally recognized genocidal acts, including imposing living conditions intended to destroy a group. A separate UN-affiliated report published last month declared famine in Gaza. Israel has rejected both accusations and reiterated its intention to control Gaza City. Never forget who drew first blood. I'm serious. Don't forget it. Separately, families of Israeli hostages protested outside Israeli Prime Minister Benjamin Netanyahu's home over concerns that the ground offensive could further endanger the 20 hostages to be alive. Now, that's how cruel these people are. And I'm talking about Hamas. They have hostages that are dead, and they won't give them back to their families. And, oh, did I mention? Never forget who drew first blood. On another dark note, Robert Redford, the Oscar-winning actor and director who founded the Sundance Institute, has passed at his Utah home at the age of 89. No cause of death was provided. Well, he was 89. Born Charles Robert Redford Jr. on August 18th of 1936 in Santa Monica, he became one of Hollywood's defining figures over a career spanning 6 decades. His performances included major roles in Butch Cassidy and the Sundance Kid, The Way We Were, The Great Gatsby, and All the President's Men. He won an Academy Award for the Best Director of the 1980 film Ordinary People. In 1981, he established the Sundance Institute, a nonprofit that sponsors the Sundance Film Festival, which helped launch the careers of several independent filmmakers, including Quentin Tarantino. Redford received the National Medal of Arts in 1996, an honorary Oscar in 2002, the Kennedy Center Honors in 2005, and the Presidential Medal of Freedom in 2016. He was a lifelong environmental advocate, and you may enjoy his salad dressing when you have your next salad. File sharing platform LimeWire, you haven't heard that name in a while, announced yesterday it has purchased the rights to Fire Festival, F-Y-R-E Festival. That's the big festival that was supposed to be, all that and went belly up. Well, LimeWire has purchased the rights to the name for $245,000, outbidding actor Ryan Reynolds' production company on eBay. The company says it will unveil a reimagined version of the infamous Fire brand in the coming months. LimeWire itself became popular in the early 2000s for music streaming, at one point boasting more than 50 million monthly users. Years after being shut down for copyright infringement, the company relaunched in 2022 as a file-sharing service specializing in NFTs. Today, it is among the most downloaded platforms on the social media app Discord, with over 2 million active users. The company has not yet revealed what it plans to do with Fire Festival, which in 2017 launched a failed music event in the Bahamas that is the subject of multiple documentaries. The organizer, Billy McFarland, was convicted of wire fraud in 2018 and sentenced to 6 years in prison. He was released early in 2022. This will be interesting to see what they do with this. Well, we all know it's Fed Day, and the Fed is widely expected to trim its benchmark interest rate by a paltry 0.25 percentage point at 2 p.m. Eastern today. But the real news will come at 2:30 when Jerome gives investors new clues about how many more cuts could occur during the remainder of the year. I suspect he's going to be a little hawkish. Markets are looking for a 0.25 basis point reduction the first of the year, followed by similar-sized cuts at the last Fed policy meetings of the year in late October and early December. How many cuts central bankers envision for the rest of 2025 will come in the form of the Fed's dot plot, a chart updated quarterly that shows each official's prediction about the direction of the central bank's benchmark interest rate. The last dot plot, released in June, revealed a consensus among Fed officials for 2 cuts this year, amid uncertainties about how the Trump administration's policies on tariffs, immigration, and taxes would impact the economy. Jerome also said that he thought the GDP would be 1.48, and it came in at 3%. That's a swing and a big miss. That's why he's got the name Too Late Powell. So have you taken a robo-taxi yet? Lyft, which trades under the symbol LYFT, surged roughly 11% midday. Now it's up almost 14% after the company announced a partnership with Alphabet's self-driving Waymo service to roll out an autonomous ride-hailing service in Nashville next year. Riders can initially hail driverless cars through the Waymo app, with plans to integrate the fleet into Lyft's platform later in 2026. The collaboration is significant given that Waymo also has deals in place with Lyft's rival Uber for its robotaxis in Atlanta and Austin. Uber shares were down about 5% following the announcement this morning. So Uber now is currently down 4.5%, and Lyft is up 14%. I've never taken a Lyft. I think it's sort of the poor man's version of Uber. But again, how do I know? I've never taken one. All right. China. Getting kind of biggity. China has reportedly banned its largest tech firms from buying NVIDIA AI chips, adding pressure on the U.S. chipmakers' sales in the country. I don't think we should sell them any of our technology. All they do is steal it. And why would they need to buy another chip? Because we've already sold them chips. So now all they got to do is tell their guys, go make this chip. Unbelievable. Shares of NVIDIA, which entered Wednesday's session up roughly a third on the year, fell about 3% in recent trading following the news. Currently, NVIDIA is down just under 3%. Amazon says it is making a $1 billion investment to raise wages and lower the cost of healthcare plans for its U.S. fulfillment and transportation workers. The Seattle-based company said Wednesday the average pay is increasing to more than $23 per hour, and said that some of its most tenured employees will see an increase between $1.10 and $1.90 per hour. Full-time employees on average will see their pay increase by about $1,600 a year. Amazon also said it was lowering the cost of its entry healthcare plan to $5 per week and $5 for copays starting next year. Amazon said that will reduce weekly contributions by 34% and copays by 87% for primary care, mental health, and most non-specialist visits for employees using the basic plan. Amazon has a global workforce of about 1.5 million workers. And last, Chicago-based startup LunaPath announced today the launch of an AI platform built to help freight brokers and third-party logistics providers slash routine work and speed up operations. Company's AI agents automate carrier check calls, proof of delivery, and document retrieval. Multi-channel follow-ups, voice, email, SMS, and updates into transportation management systems. This might be one to keep an eye on. Now, this is a startup. I don't think it's gone public yet. The name, again, is Luna, as in the moon, L-U-N-A, Path, P-A-T-H. Again, not a recommendation to buy it, but I do think it might be worth looking into if you're still into buying stocks. We found a better way, but some people still like to buy stocks. All right, here's the S&P. We got a new all-time historic high yesterday. And as often happens with these all-time historic highs, we then get a retracement. One exception was here. Okay, this is Wednesday, Tuesday. On Monday, we got a new all-time historic high, a new all-time closing high. But yesterday, we closed below where we did Monday, And now today, we're sitting right on top of support at the black step line. Right below that, there's support at blue and climbing, and the 62% fib extension, and then the daily BBC. Now, the activity from the Fed announcement today will probably throw this all out of whack for a couple days. So keep a good eye on where it is here, because when the dust finally settles, there's a high probability price will be somewhere in the vicinity of where it was when the announcement came out. But I do believe it will be the beginning of a sharp correction. I mean, look at this. Okay. Trees don't grow to the sky, neither do stocks. Okay. Now, Logic 247, that's our 24/7 around the clock E-mini alert service. It's not just E-minis. It's also crude, gold, and silver. We're currently in week 372. That's a little over 7 years. We did the math the other day. Over the last 372 weeks, we've issued over 20,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Every logic alert has an entry price, long or short, then an initial target designed to help you get your goal for the day, and in most cases additional targets, and then a final trade to target. The true purpose of the logic alerts is to help you learn how to read a chart. Even if you don't actually trade one of the alerts because it triggered in the middle of the night, by going to that alert and going to your charts, you can draw horizontal lines and see why the entry was where it was, why the initial target was where it was, why the additional targets or resistance or support are, and the final trade to target. So far this week, with the Fed coming up, I didn't put anything out last night. We've issued a total of 20 alerts since the markets opened Sunday night at 6 p.m. Eastern. Still waiting on the outcome of 5. That gives us 15 actionable alerts so far, of which 1 or 7% would have been stopped out. Again, based on simple market structure and a simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6:30 a.m. Eastern, so it's very possible that these 5 waiting may have resolved themselves in one direction or the other. She will, of course, update the recap this afternoon or early evening, as she does each and every day. Now, 7 years is a long time, but long before we had a Logic 247, we had our original alert service, the concierge trade alerts. They're different in a number of ways, but top of the list, they don't come out around the clock like the logic alerts. Logic alerts can come out at 2 a.m. or 2 p.m. as opportunity presents. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the CTAs are different. They're published as a static report shortly before the Globex Open each evening. The Wednesday session that we're in right now started last night at 6 p.m. Eastern. The Wednesday session will end today at 5 p.m. Eastern. The Thursday session will begin tonight at 6 p.m. Eastern. So you get the idea. 5 minutes ahead of the open. All of our traders, all of our trial members had all of these targets 5 minutes ahead of the open. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's just take a look at these charts. Okay. So again, as I mentioned, we put in a new all-time historic high yesterday at 66.9675. That's 1, 2, 3, 4. No. 1, 2, 3, 4. 5 consecutive days where we put in a new all-time historic high. Now, the intraday high and the closing high, that of course is two different things. As you can see yesterday, while we put in a new all-time historic high intraday, we did not put in a new all-time historic closing high. And if you look at the black step line, it's getting ready to cross blue and climbing, okay? And as the step line crosses blue and climbing, we anticipate a retracement back to the VVC. But in the much bigger picture, to keep this bull market healthy, the market needs a decent retracement. Here's the 24, way down at 62.80. So right now, just to get the simplest or the smallest possible Fibonacci retracement would send the markets down to 62.80 from 6,700. Let's just call this 6,300, okay, to make the math simple. That's a 700-point drop, is it not? Now, after day after day after day after day of new historic highs, what do you think the pundits on TV are going to do with a 700-point drop? Yep, yeah, we were right. Trump sucks. Tariffs are killing us. We got to impeach him. It'll go on and on and on. But as you know, the indices always go higher over time. Individual stocks can go to zero, but if it's a good company, it'll bounce back. But again, the indices, the way they're constructed, the weak are culled from the herd and replaced with new strong companies. It's a revolving door. They're always shuffling the deck so that you don't have to do the homework. If you know somebody young, in their late teens, early 20s, just tell them to go buy, an S&P index fund and feed it on a weekly basis. Don't even look at the stock price. Don't even listen to the market news. There's no need to. When the market's down, if you can afford $50 or $100 or whatever the case might be, you'll get more shares in that fund. And when the market's putting in all-time highs, you'll get fewer shares. It's called dollar cost averaging. But if you give that information to someone who's under 25 today, there's no reason in the world they shouldn't be able to retire comfortably by the time they're 50. Make somebody's day. All right, here we go. Here's the S&P. And let me fix this. And I'll flatten this. Okay. All right. It's a nice move. A real nice move. Okay. The vertical line separates today Wednesday, back here's Tuesday, back here's Monday. Okay. The vertical lines separate the days. The horizontal lines are the weekly trading zones, which are published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. The green line is called the BBC, stands for Bull Bear Cross. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. And as you can see, when price retraces to the BBC, the pullback holds more often than it doesn't. But we know eventually it will trade through, as it did here, but then the retracement, the pullback held. And then the pullback held, and the pullback held. Here we overshot, looked like we were headed higher. That was a bit of a head fake. So we opened here last night, right here. We got above blue and climbing, ran 2 points right into the weekly trading zone. Now this long target was up here really for what's going to happen this afternoon. When price starts to spike higher, this bearish cross, that's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, and it just keeps extending, the first time price revisits this area, whether it's today, tomorrow, or a month from now, will most likely be good resistance. So we opened last night, and keep in mind we had a leg down, a retracement, pullback held. And then we had a leg down and we ran into blue and climbing, which acted as support. Support will always send the market to resistance. This was resistance times 2. When price moves up to a weekly zone, we expect resistance until proven otherwise. And as I already said, the pullback to the BBC holds more often than not. So resistance times 2. That resistance sent us right down to the short target. We even overshot it just a little bit. Okay. This low right here from yesterday, that's your short target. Okay. And this area down here, okay, right where red turned to blue, see, that's this little area right across here. And then right here, buyers came in just above the low of yesterday. They drove it up, and that's where we got that little head fake right there, because we had a candle open and close above the BBC. That typically indicates a change in direction. But a head fake means that's not what happened, because look what happened. We came back down through the short target. We spiked the weekly zone at 58.59. Now we've still got quite a few zones below, and we've still got one more zone up overhead, and we still have 2 full trading days after the circus this afternoon. So this low here, you see right here where the black step line crossed blue and climbing, that's an important price, important area, and the market found support. We had a red candle all the way down. And this was at 4:30 a.m. Eastern. This was the London session at work. But by the time the 30 minutes were over, we were all the way back up to here. And then the pull back to the BBC held. So we get another leg to the downside. and we get above the BBC. We open and close above it. We run all the way up to the zone overhead. We spike it, and we close well below it. And we get back below the BBC. We come back down to the zone, support, support, support. Now we finally broken through that. So this current low right now, it's just above that low. On the way down, potential support here, here, and here. You'll notice on Monday we ran right up to this zone, resistance, which sent the market right back down to this zone, support. Okay. When price rallies up to a zone, we expect resistance till proven otherwise. And when it drops to a zone, we expect support. And I remind you, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Once the zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. Here's the Dow. We opened last night below the BBC. When we're below the BBC, we're bearish. We're thinking lower prices. See yesterday how price got below the BBC, and then where did it find support? At the weekly trading zone. Prior to that, where did it find resistance? At the weekly zone. So it went from zone to zone. So last night we opened below the BBC. Blue and climbing turns into red and falling. Takes us right down to the short target to the tick. Now the short target is simply based on this low right here. That's market structure. Support will send the market to resistance, which will send the market back to support, which will send the market looking for resistance. And it finally found it at this zone, 46,440/45. Now look at the black step line. Notice how it, on the way up, it ran parallel to blue and climbing. But right here, it hooked right and got on the right side of blue and climbing. When that happens, what do we expect? A retracement back to the BBC. Now, we're coming into a zone, 46,300/305. Price consolidates there for a little bit, then the BBC will rise to meet price, which is a different dynamic than price dropping to the BBC. So this is an obstacle that, remember, on Monday, resistance, Tuesday, resistance. We could see it today, Wednesday, become potential support. Okay. If it makes it through the zone, then look for support here at the BBC or the top side of the long target. When price trades through a long target on the retracement, the top side of that target often becomes support. And the same is true of when price trades through a short target on the retracement. The underside of that short target will often become resistance. Happens over and over, again and again, day after day. I talk about it every day here on the broadcast. The Russell. Okay, this was the open on the Russell last night. Dropped to the BBC, consolidated most of the night. Finally woke up this morning at 8 o'clock, ran up to the zone overhead, consolidated for an hour, and then ran right up to the zone overhead, 2441/42. We consolidated and then spiked. The step line has crossed blue and climbing. It's crossing right now. See it? And what's price doing? It's making a beeline for the BBC. When it gets there, this area should be good support. ×2. But come 2 o'clock, anything can happen. Okay? You would think, oh, okay, well, the Fed just cut interest rates by a quarter point. Of course the market's going to go up. And it very well may initially. But remember, the first move is usually noise. The second move is typically the truth. So keep that in mind as you watch the action today after the Fed announcement and the Fed press conference. The NQ opened below the BBC. See, we had a leg down, the pullback held. And that took us right down to the short target and to the weekly zone, to the tick. The zone published Monday morning at 6:15 a.m. Eastern. Support gave us a bounce that took us up basically to the early overnight high right here. See that? Right there. We did not take out this high. That is in and of itself a sign of weakness. We come back to the short target. We spike the zone. Bounces up to the BBC. And then we consolidate. Only one of three things happens when price encounters a zone. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. Now, when that happens, typically price will retrace back to the zone it sliced through and continue in the direction of the slice. But the selling was so heavy-handed here, we did not get that retracement that we typically see here. We just continued right on down to the zone below, consolidated for a few hours. Now we're heading lower. And where should we expect support? Right here at the bullish cross. Okay. See where the blue line gets above the green line? Right there. Now we almost hit it. But this candle is not done. And we're going to get a new candle here in about 2 minutes. Okay. And that may finish the move, but you should expect this area under normal market conditions to be good support. Crude oil, pretty quiet and sideways. We opened here above the BBC, but with red and falling overhead. So price is kind of trapped. Red and falling drives it down to the BBC, where we consolidate for quite a few hours. And then we complete the move all the way down to the short target, pretty much to the tick. And it's simply based off this low from yesterday, right here. That is market structure. Support sends the market looking for resistance. And that's where it found it, right there. Resistance sends us looking for support. See right here where red turned to blue? There's your support. Now we're sitting on top of the BBC, but we got blue and climbing directly overhead. So price is trapped between potential resistance and potential support. Let's stay away from that until it works itself out. On gold, here's where we opened last night. We're above the BBC. We made a little run up. And this high here is this high right here. Now, because I expect explosive action this afternoon, I put the long target up here where the high was yesterday. Good chance we may see that today once the Fed noise begins. So we caught a bounce right into resistance by just simply looking left. Resistance will always send the market looking for support, which it found at the short target, which was based on this low right here. So from this high to this low. There it is. Support sends us up to resistance. Remember, the pullback to the BBC holds more often than not. That sends us down to the short target. We get a nice bounce, but we bounce right into resistance. The step line and red and falling. That takes us all the way down to the zone below at 36.96/97. Now remember, a $1 move in gold is worth $100 per contract traded. Red and falling turned to blue and climbing after we hit this support area here. We got above the BBC, the pullback held. Notice we spiked the BBC right to the zone. And then we get a leg. Now what's happened? The step lines cross blue and climbing. Jim asked, with the long and short targets, how would you determine where to get in the trade? Based on the upcoming Fed news? No, we don't ever trade news, Jim. Maybe you should book a mentoring session, and I can maybe go over it with you. When price pulls back to the BBC, you expect support. Pull back holds, then you buy the open of the next candle, and then you enjoy this. Keep in mind, these are 30-minute charts. These are not range charts, okay? The step line is now crossed, and we expect price to drop where? To the BBC. Then it becomes a question of, does the pullback hold or not? Pullback holds more often than it doesn't. Like it did here, here, here. Here we actually traded through, but did a quick reversal. It's a little bit unusual. But feel free to book a session, Jim, and I'll go into it in greater detail with you. So as you can see, price is coming now down to the BBC. If the pullback holds, then we would look to go long in the opposite direction if we didn't have the Fed announcement coming up. And again, I don't recommend any trades till well after the markets calm down. Last is silver. Here's where we opened last night. Now remember, we had a leg down. We found support yesterday right at the weekly trading zone. We bounced up to the BBC and the pullback holds more often than not.
All right, here I am.
Okay, and then we dropped to the zone, got a bounce, came back to the zone, consolidated, then we dropped all the way to the zone to the tick. That's the zone published Monday morning, 6:15 a.m. Eastern. From there, we roared all the way back up to the BBC, got through the BBC. Now we're trying to we are getting a retracement. The step line crossed. So support at the BBC. If the pullback holds, you got support times 2 here, the zone and the BBC. If the pullback holds, look for a leg to the upside. But again, be careful doing anything because the Fed announcement is not too far away. So, Michael is here. He's going to give us a recap of what happened in the live training room. And then do some live trading on the TradingView platform. I'll come back and wrap things up with our good word for the day.
All right. Sorry about the delay. My father-in-law actually completely lost control of all stuff. He was choking it in.
Is he okay?
Yeah. He got him breathing again, and he's breathing so he's not spitting stuff up and everything else. But he'll be all right. He'll make it.
Okay.
Make it to his next meal. That's for sure.
All right. Okay. Well, your charts look good.
Okay. All right. Here we go. All right. Good afternoon, everyone. Happy Wednesday. Today is the 17th day of September 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button, and it will bring you to this registration page where all that we ask for is your name, your email, your phone number. Then down at the bottom, gives you TradingView login ID. All right, down there. That's all we need down there is a TradingView login ID. Once you do that and you send it to us, then we will be able to get your indicators indicating for you on your desktop and give you all the information you need to get into the room in the morning with us. All right. So it wasn't a super day today. As a matter of fact, we haven't had a super day yet this week. I guess Monday was the best. We're up 925 on Monday. But it was better than yesterday. I did get the goal for the day in the very first trade today. We got 45 ticks on the NQ on the very first trade. But if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 17th day of September 2025. Made 36 ticks on the NQ, 9 ticks on the YM, 15 ticks on gold, and 1 tick on the ES. That puts us at 387.50 on the morning session. Today, it took 1 minute and 1 trade to get to the goal for the day. At that point, we were up $2,250 with 10 contracts on, or $225 with 1 contract. All right, we took a total of 22 trades this morning. So on the month now, we're at $8,820, averaging $735 per contract per morning session over 12 days. On the year now, we're at $193,265 over 159 trading days, averaging $1,215 per contract per 2-hour morning session. Now, if you're to quit trading when you get the goal for the day and you're at 1 contract per month, so far this year, you would have only had to work 22.1 hours to be on your 9th contract, 22.1 hours total. You'd be up $127,337. Okay, averaging $5,761 per hour. All right, here we go. Now, I just had a thought. Okay. Sorry, I gotta go over the trades. I thought, let me start out with the ES, right? Because we only had 1 trade on the ES. It was right here, and we got 1 tick on it. Now, I don't feel like we missed a lot of trades here on the ES, but let's just go back and make sure. And a green background, so you would have been looking for an up close coming out of the oversold that crossed over a flat midpoint. Red background, you would have been looking for one coming out of the overbought that crossed below a flat midpoint, crossed above a flat midpoint. Here's one right here. Nope, it didn't come out of the oversold. That's that one right there. This was the very first trade right here. That was the first trade available, and I took it. I got 1 tick. The next trade, that was arguably a trade right there. It came off the midpoint. You could have taken that trade right there, but I missed it. Well, that was actually during the break. So there was only 1 trade available during the morning session, and I took it, and I got 1 tick profit. During the break, there was 1 trade right here and 1 trade right here. 2 trades during the break. Both of them looked to be profitable trades. And that was it. So not a lot of movement there on the ES. I don't expect you're going to get a lot of movement here when I start trading in a few minutes either. This is the YM. On the YM, we started off here with a plus 10. Then we got 2 more to get us to 12. Then we had 5 more to get us to 17. Then 5 more to get us to 22. Then we had 1 more to get us to 23. Then 1 more to get us to 24. And then we stopped up. So there's a couple of 1-tick trades in here somewhere that I got. And then we stopped out on this, and that brought us back down to 9 from 24. We dropped down to 9. And that is where we ended up with the YM. Now, were there any trades on the YM that were valid? This one right here. That was a valid trade. Didn't work out at all. That was a valid trade. This one right here. That would have worked out okay. This one right here would have worked out okay. I think that right there was one too. That would not have worked out. And we have one developing right now. If we could close on this bar right now, that'd be a valid trade. Uh-oh. I forgot I created that thing during the break. I have to start up Sierra again. Hang on. It comes up pretty quick. Usually I might be able to get this YM trade off. If it doesn't go 5 ticks into profit, I can still try to enter the trade. Okay, it's still coming up right now. And I gotta open the right chart book. I missed it now. It's gone too far into profit. During the break, I had created a micro chart book that had been requested in those of you guys who have joined this channel. This is open to the public, this channel right here. I put a micro chart book in here for Sierra. So if you're using micros and you want to have all your DOMs rolled forward automatically, go open this chart book up. Okay, download it, stick it in your data. Stick it in your Sierra chart data file, and take out all the files and put them in there. And you'll have all the micro DOMs rolled forward for you. Okay. So I couldn't take this YM trade because of that. But that was the YM today. All right. And the ES, we had just that one trade. I already went over the ES. And so now finally the NQ. And we didn't have much on the NQ today either. And gold, the YM, and the NQ, we had an equal number of trades on all of them, I think. How many trades did I say we had? 22, right? Yeah, we had 7 trades on each one of the markets. And this one right here, we started here. The NQ, this is where we got our goal for the very first trade. We picked up 45 ticks right there. Then we had a break even. Then here we went from 45 to 49, then 49 to 57. Then 57 to 61. Then 61 to 36. Right there, we stopped out. 61 to 36. Hey, look, I drew this in this morning. Remember, you guys might remember me drawing this in this morning. Michael R. I don't know if you're in here right now. He would ask me about that this morning. I don't see Michael R. this morning right now. But you had asked me about that this morning. And Phil, okay. So we ended up here. We were at minus 25 down to 36 ticks, and then we had a break even, another break even, and then it went sideways on us. Now, in all this sideways business, that was too high, that was nothing. This was a valid trade right here. That was a valid trade right there. That would have been a long time going sideways before it moved down. It was a valid trade. That was a good trade. That was a good trade. That was a good trade. So 3 positive trades. And that would have stopped you out, I think. Yeah, it would have eventually, you might have gotten, it would have eventually stopped you out way over here. It was a long trade though. But you had a few good trades, 1 stop out, and then going in the other direction. That's not a trade. That's not a trade. Flip back around this way. This isn't a trade because it didn't make it into the oversold. This would be a trade right here. That would have stopped you out. And that was it on the NQ. So we had a few good trades and 1 not as good trade. And that brings us current. All right. So if you've not taken a free trial, listen, you want to go to mytradingiq.com, click on the purple button. There is no credit card required for this trial. Click on that. Okay. Once you do that, we're brought to this registration page. Just fill it out. Let's see if we have any trades whatsoever. We had the 1 NQ trade, the YM trade over here that I missed because I wasn't ready. And let's see what we get with these others. I have 2 YM DOMs open now. This is supposed to be a Russell DOM, but we'll just roll with it here. And all right, questions. questions. Let me bring this up. Any questions? Hey, you do have something, Jim. With the long and short targets, how would I determine where to get in the trade based on the upcoming Fed news? That wasn't to me, was it? That was to Dwayne. Dwayne, yes, sir. Okay, good. Yeah, that was it. All right. Because in my world, the Fed stuff, it didn't do any of the stuff that I wanted to do yet. It's starting to go down right now. The stuff that I had thought it was going to do, we just kept getting more and more positive news. We kept getting all-time highs and all-time highs and all-time highs all the way into yesterday. 4 days in a row, we had all-time highs. And so now it's starting to sell off a little bit. I don't know what it's going to do now. Those puts that I bought that expire tomorrow, they'll probably expire worthless. They're down about 50% right now. Just in, I bought them when prices were about right here, I think is where I bought them. Is that right? Yeah, September 11th. I think I bought them on that day over here. When price had done this up here, I think is where I bought them. And the increase in value, just a tiny bit, but I was expecting a big drawdown down toward the BBC. It's going to happen. It's just, I don't think they're going to make it. I did, Ronnie. Are you listening right now? Ronnie, are you listening? He's not listening right now. He just asked me that same question right now. And so now the underlying price is pretty much where it was when I bought them. It's just now they expire tomorrow. So if something, we're going to get a decline today after the news comes out here in about an hour. We're going to get a decline, and it's going to go up probably to begin with and then sell off because the news will be out and they'll sell the news. And I might get some value out of it when that happens. We'll see. But it's a risk you take. My maximum risk was what I paid for the options. I can get out of them right now with about 50% of what I put in, or I can just wait and maybe get out of them with 100% of what I put in. Probably I'll get that opportunity today. I think get out of them at break even, if not better. We'll see. We'll see. Time will tell. All right, so let's go back to 4, and we don't have any trades here anywhere. So we're waiting right now. All right. So we are looking. Well, any chance to trade? I don't know if we're going to get one though. On the gold right now, the gold's got to have an up close to get us into the overbought, and then a down close. On the YM, we're going to have a down close to get us into the oversold, and then an up close. On the ES, we have to have an up close to hit the midpoint, get into the overbought, and then a down close. So they're all mixed up. They're back and forth. Every one of these is back and forth. Yes, years ago, we used to trade the news. Let me go up. Oops, one more. And so now we just wait. There's a spread right now on the YM. You see that? As we get closer and closer to the FOMC, there's going to be more and more spreads everywhere. I think the markets are going to thin right out. There's a chance for a trade here. If you get a down close, followed by an up close on the NQ. Down close, followed by an up close on the NQ. There's the down close. Now we need the up close on the NQ. And there's the up close on the NQ. Here it is. Let's see what happens with this. It's really jumpy right now. Market's getting thin. You see there's a spread in here now too. It's a one tick spread. Dun, 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 dun. Need 10 ticks in profit to bump this stop to break even. And we have a 45 tick target on it. The 25 tick stop. Okay, from 98, it's going to get up to there. I think it's going to go up here. We'll get ready. It's almost there. It's going to pop. Once it goes, I think it's going to pop fast. One way or the other, it's going to go fast, I think. A little bit more. There it is. Stop to break even. All right, we're in a no-lose position on this. I'm going to lock in a point. Now we're really in a no-lose position. We're probably going to end up getting out with a point, but I'm good with that. It should get up to 407.25. My target's at 409. It's going to go up to 407. I think it'll go up to 409 too. I'm going to lock in 3 points on this. It's 12 ticks locked in. Everybody had a chance to get into this. 16. And we're out with 16 on that NQ. Yes, years ago we used to trade in this. That was when we used to have a range of like 10 points a day. It'd be unusual for it to run 20 points at a time. Highly unusual. Once a year. All right, we did make it up to the swing high, and 950 is where my target was to make it up there yet. But we almost have a trade over here on the gold. If the gold gives us an up close or hits the midpoint and gives a down close. All right. So that is our only trades so far. We have one positive trade today. We didn't come off the midpoint there on the gold. So that's not a trade. Not a trade. All right, now on the gold, we need an up close followed by a down close for a trade. On the NQ, we need a down close followed by an up close for a trade. We don't have anything here on the ES. We could get something with an up close followed by a down close. We're not going to have anything on the YM. Okay. Because we use range bars, because we know what we're looking for with this and with this ahead of time, you can determine ahead of time exactly what you need. And if you don't get it, there's no trade. Okay. Like this one here, it just changed. We needed a down close on this bar right here to get us into the oversold, followed by an up close. Now we're going to need two down closes, or a down close, then a wick. You see how that could come together? Over here on the gold right now, it's too far away from the midpoint on a single down close to give us a trade, so it's not going to turn into anything. Because if we get one down close, it's going to come out of the overbought and disqualify it. So on the NQ right now, we need a down close to get this into the oversold. Then after that, that'll put it about right here. And after that, the next bar could have a wick that hits a midpoint and gives us an up close, taking us out of the oversold. That's what we need, but I don't know if it's going to happen. All right. I don't know. Let's see on this. It cannot be above 56. It is right at. Close on this on the ES might be right on the midpoint. Guys, I've run out of time. I know it's a few minutes late, but there's not much sense in trading this right now. Anyway, we're getting too close to the upper limit to see. I'm going to start seeing bigger and bigger spreads as we get closer and closer. Right now, the gold has a 1 tick spread, the YM's got a 1 tick spread, the NQ's got a 1 tick spread. So I'll just wrap it up with that one winning trade that we had right there. And I will tell you, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required. Click on that purple button. It's going to bring you to this registration page. Just fill out the page. Once you do that, you'll be sent everything you need to get into the room in the morning and get your indicators indicating on your desktop. As long as you give us this TradingView login ID down here. Get your indicators indicating on your desktop. All right. All right, that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, and Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. A recap of the morning session.
Today, it took 1 minute and one trade to get to $2,250.
Good job.
Thank you. Thank you very much.
All right, guys, we have covered everything. So about 45 minutes after I sign off, if you missed any of the broadcast and you want to see it in its entirety, go to youtube.com/CFRN and just click the live tab. Now, if you want to become a member, send an email to support@cfrn.net. Let Valerie know you want to become a member. She'll send you the information that you need to become a member. Once you become a member, she'll then send you all the information you need to begin your education. You're going to get 2 hours of live training every trading day. It's an interactive environment. Real trades, real time, real money. You're watching, trading along in your demo account so that you can qualify to go live, and asking every question that pops into your head. It's rules-based trading. So every question you ask, you're always going to get the same answer. If you ask a question today or a month from now, you're going to get the same answer. Rules-based trading. Okay? On top of 2 hours of live training every trading day, you have access to private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs. It doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's simply how markets work. And as I just showed you in today's broadcast, and as I do each and every day. As a passport holder, you'll get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening. Monday morning, you'll get the weekly trading zones, 6:15 a.m. Eastern. We've published the zones every Monday for our members for over 15.5 years now. Once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. On Thursday afternoons, you will get an invitation to attend the Members Only Workshop every Thursday night at 8 p.m. Eastern. And you'll get the golden keys that opens all the private channels in Telegram. When you're on the trial, you have access to the public channels. Once you become a member, you have access to everything a trader needs. All under one roof. One low price. So let's wrap it up here. Got 25 minutes to the Fed. And remember, the FOMC announcement is at 2 p.m. Eastern. So there will be a wave of volatility there. Quarter points already baked into the cake. But at 2:30, when the press conference starts, there will be a fresh wave of volatility. And keep in mind, the first move is typically noise. The second move is typically the truth. But remember, you're going to have two different waves of volatility. Okay? All right. Let's wrap it up with our good word for the day. Acknowledge your mistakes and shortcomings. James 5:16. Confess your trespasses to one another and pray for one another that you may be healed. We all make mistakes, misjudge issues, and mess up at some point. We're all human. The truth is that mistakes are one of the major ways in which we learn and get wiser. But because of our fear of being criticized or losing face, we often attempt to hide our mistakes. The only real calamity about mistakes is if you don't learn something from them. Failing to admit a mistake blocks the path to growth. Listen to the words of the Lord when he admonished the Israelites to learn from their mistakes. In Jeremiah 8:4, God said, Jeremiah, say to the people, this is what the Lord says. When people fall down, don't they get up again? When they discover they're on the wrong road, don't they turn back? It's a relief to you and an inspiration to others when you can acknowledge your mistakes without being defined or derailed by them. Circumstances and other people may have swayed our decisions, but in the end, we are each responsible for what we do. When we make a mistake, the action we take is our choice. The best approach for dealing with your mistake is to accept complete responsibility, learn from it, decide how not to repeat it, and go on. Interestingly, other people will connect with you more and even respect you more when you are able to acknowledge your weaknesses. And it sets them free to do the same thing. Humility is one of the attributes that people esteem in others. Pride is hated even by other proud folks. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.